We got the midweek check-in here on Stonkcast. Welcome back. We got Trump, Elon drama, Meta flying high off AI hopes, and we had some non-farm payroll data that came out this morning that looked a little shaky. Stick around till the end. I'll show you what you need to be paying attention to as we wrap up this first trading week of June. Don't forget to like, subscribe, and follow wherever you listen to podcasts. Now, let's get into it. Welcome back to Stonkcast, the market show for the average Joe, whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back. We got a midweek check-in, and it's been a doozy of a week so far. We're about midway through, and we've had a lot of drama, folks. So let's kick it off first. So we all know that Elon Musk was appointed temporarily to support the Trump administration with the efforts of Doge. And earlier this week, Trump sent him off very nicely in the Oval Office with a nice little key, and everything seemed pretty rosy. And then Elon started with his post. So according to CNBC, Musk whips opposition to Trump tax plan, kill the bill. So Elon is not happy at all with the president's tax bill right now. Elon Musk on Wednesday ramped up his attacks against the massive tax cut bill that President Donald Trump is pushing Congress to pass, claiming it will condemn America to, quote, debt slavery, and urging lawmakers to, quote, kill the bill. Call your senator, call your congressman, Musk wrote as he decried the budget package at length on his social media site X. Bankrupting America is not okay. So he is not happy with this at all. According to Elon from his post on X, quote, a new spending bill should be drafted that doesn't massively grow the deficit and increase the debt ceiling by $5 trillion. So I in part can agree with this. I feel like Congress just spends way too much money as it is, and the fact that we're adding to it does not seem great. He has basically fired off a little more than 24 X posts or reposts that either explicitly criticize the bill or comment on related issues like the size of America's debt. So it's really interesting. He was in the Oval Office. Everything seemed very friendly. Obviously, he helped get Trump in office, and the minute he leaves, he starts going on this X post rampage, I guess you could call it. So Musk, he's signaled he's refocusing on electric vehicles, rocket business. He was prompted to speak out against the bill in part because it cuts an EV tax credit that helps Tesla. A source familiar with the matter told NBC News on Tuesday. So it seems like in part, Musk is not happy about this because of his own interests. At least that's what it seems like. The fact that, this bill is going to cut the tax credit is obviously not helping him or Tesla for that matter. Musk had also discussed continuing to work for Trump as a, quote, special government employee past the 130-day legal limit for the role, but he was rebuffed by the White House, according to NBC. There were 2 other points of conflict. So the Trump administration had refused Musk's idea to have the Federal Aviation Administration run off his Starlink satellite system, and it had withdrawn Musk's preferred pick to become administrator of NASA. So basically, Elon is not happy that despite getting Trump in office, it seems he's not getting a few of the things that were really important to him. The EV credit, obviously the fact that the Federal Aviation Administration is not going to run off Starlink doesn't help him at all. And basically that the administration did not appoint his pick for administrator of NASA. So Elon is not happy, and the drama continues. On Wednesday afternoon, Trump's account on his own social media site, True Social, reposted a screenshot of Musk thanking the president for letting him lead Doge. So that is very interesting. So Trump is staying rather quiet while Elon is firing off like a 16-year-old girl. And look, I like Elon. I like him a lot. So it calls spade a spade. He's going on a social media rampage right now. He's not happy about the tax bill. And it's really interesting because these two, Trump and Elon, have been very close, obviously, for the better part of a year and a half, basically through, the whole campaign. He was on the campaign trail with President Trump, really helping him out, and now he is not happy at all. So thought that was interesting. We'll, be paying attention to this if anything else comes of it, but I find it interesting because Trump is not afraid to send off any kind of messages, and he's just being very quiet right now. He's not saying much at all on this, and meanwhile you have Elon saying everything. So very, very interesting. Let's do a quick market check-in today. Basically kind of a mixed bag, kind of muted day for the overall market. You had some gainers mainly in the AI space, such as Meta and Nvidia, which we'll get into. JP Morgan did not do too great, and really just a mix of green and red. So not a whole lot of bullish momentum, not a whole lot of bearish momentum, just kind of muted. If we take a look at how the markets closed on Wednesday, the S&P 500 literally closed at 0.01%. So basically flat, right? You got the NASDAQ, which closed down 0.2 down. So basically, again, very muted response. We look at the VIX right now. The VIX is sitting at 17.61. Let's do a quick check-in on SPX on the daily chart to see where we are sitting right now. So on Wednesday, we had a red day, basically, flat. I would venture to say we are maybe due for a bit of a pullback. We've had a nice rally of late, and it just kind of feels like things are losing steam right now. Now, with that being said, we are pretty close to an all-time high, which is, very impressive. I think we are actually just about, I would say, 2, maybe 3% off an all-time high right now. So that's pretty impressive. We're up over 20% from the April low, so that's also impressive. But overall, it just kind of feels like things are losing a bit of steam here, and really all it takes is some poor headline to send this thing south. So I would be a bit hesitant remainder of the week if I was a bull, but as of right now, things seem to be holding up. The NASDAQ performed better than the S&P 500 today, again, mainly fueled by some of that AI news that's been coming out lately. So the NASDAQ's looking great. S&P kind of flat. If we look at small caps, they were a bit off on Wednesday, but Tuesday had a nice big green day as small caps got a nice lift. So we'll see what happens there the rest of the week. As of right now, if you look at the individual sectors within the S&P, it's kind of a mixed bag. On Wednesday, your biggest gainer, I believe, was communications, and your biggest loser was financials. No, excuse me, utilities. Utilities were the biggest losers. But financials were down as well. So that's kind of where we stand at right now in the market. Some levels that I'm paying attention to, if we look at the S&P 500, we are above that 5,900 level, which is great. The all-time high sitting at 6147, and right now we're at 5,970. So we're creeping up to 6,000, which is just wild considering where we have been. So we'll be, paying attention to that the remainder of the week. If I'm a bull, I would obviously love to get above 6,000 by the end of the week, but whether or not that actually happens, we will see. So some of the stocks that have been flying, though, in particular, Meta. Meta has been on a tear, and a big part of the reason why the NASDAQ has been doing so well. So take a look at Meta here. So a couple weeks ago, we had a gap up on Meta, basically after earnings, bit of consolidation here, another gap up, and basically over the past week, it's just been grinding higher. And then on Monday, we had a massive green candle, opened around 644, closed at 672. A bit of a pullback on Tuesday, but not too crazy. And then today, another rip. This thing went from 670 all the way up to 687. Keep in mind that we have an all-time high on Meta sitting at 740. And this thing just keeps on ripping. And so you might be asking, why is Meta ripping, Brandon? Well, part of the reason is because post the earnings, they came out with a deal with Constellation Energy, according to Yahoo Finance. Constellation Energy stock soars on 20-year nuclear energy deal with Meta. So that's another one that you need to be paying attention to as well, CEG. So basically this company here, if we take a look at the chart for it, had a big opening up to about 340 from 312. Well, it had a massive gap up basically. So it went from like 312, opened at 341, and then sold off to 311. So it didn't hold weight there, unfortunately, for CEG, but basically they got a deal with Meta done for basically to help with Meta's AI infrastructure. So taking a look at the article here from Yahoo Finance, Constellation Energy stock soared 7% in early trading Tuesday after the nuclear power company announced that it had signed a 20-year agreement with Meta as the social media giant's energy demand soar due to its AI data center expansion. So basically, Meta is doubling down on AI. They need more energy, they need more power to support that, and that's where they're getting it from. Constellation Energy, a 20-year agreement, pretty impressive. Shares of Constellation Energy were already up 27% for the month after the company said in its first quarter earnings report in early May that it was making tremendous progress on new power agreements. And sure enough, it did, locking down one of the biggest companies in the world. The Trump administration passed executive orders aiming to expand U.S. nuclear energy capacity later that month. So this is an interesting setup for Meta. Obviously, they have some really big goals, big plans for the future as it relates to AI. And right now, the market is receiving it very, very well. And there's been some sympathy plays with this. I don't know if you can technically call NVIDIA a sympathy play, but basically anything AI related, I feel like is getting a lift in part due to the strength that Meta is showing. If you look at NVIDIA has been very, very strong as well. Nice close today at 141 and creeping up to that 153 high that it had back in January. So that's where we sit right now on those. They're all very, very bullish. Technically speaking, they're above the 250 20-day moving averages, looking very strong for Meta. The problem for me with Meta is it's so expensive. Those contracts right now, if you're looking to trade options on it, are very, very expensive. But with that being said, the current IV percentile is 18%, pretty low. That means 18% of the time in the past year, basically the implied volatility has been lower than it currently is. So right now the implied volatility on it is 32.49%. I mean, this is a massive company. It's worth, the market cap's over $1 trillion. So you're not going to get, massive implied volatility on something like this. But with that being said, there's still a lot of money to be made here. If we take a look at the options chain for the next monthly, which is June 20th, and we just take a look at some of the open interest currently sitting on Meta, you got a ton at 700, which makes sense. It's a psychological level, but open interest right now just above 20,000 on Meta. So basically, if this thing creeps up another $13, gets that 700 level, you could potentially see some gamma squeeze here, basically meaning that all that open interest, market makers who sold those calls at the 700 strike are going to need to cover their end by buying up shares in case those 700 call strikes get exercised. And so you could see a nice push above 700 if we get up there. So that's where we're at right now with Meta. Mark Zuckerberg doing his thing. Things are looking good on the AI hype. Something that's not looking too good, though. ADP jobs report that came out this morning. Private sector hiring rose by just 37,000 in May, the lowest in more than 2 years. ADP says private payroll increased just 37,000 in May, below the 60,000 in April, and the Dow Jones forecast of 110,000. It was the lowest monthly job total from the ADP count since March 2023. Regarding wages, annual pay grew at a 4.5% rate for those remaining in their position and 7% for job changers, both little changed from April. So not great numbers that came out this morning. not what you want to see. Ideally, you want to see that, hiring is still increasing, and basically you might be seeing a softening of the job market here, which is one of the key things that you're going to get, Jerome Powell and the Fed paying attention to when they're considering, lowering rates, doing any kind of rate cuts. So as of right now, that's where we stand as far as ADP. Not great. And then, Trump won't respond to Elon, but he definitely didn't hesitate to respond to Jerome Powell. ADP number out, Trump says. Powell must now lower this rate. He is unbelievable. Europe has lowered 9 times. So obviously Trump wants, Jerome Powell to cut rates, right? And essentially looking at this ADP number, he's saying, hey, Daddy Powell, do your thing. We need a rate cut. As of right now, the Fed is still holding strong, and it doesn't really seem like they are going to, do anything there. But that kind of leads me into my next point here. Taking a look at the economic data, what we got left for the week ahead, what you should be paying attention to. The interesting thing about this non-farm ADP report, it only focuses on the private sector, right? And so when you compare that with what we got earlier this week, which was the JOLTS report, that was fantastic. The forecast was 7.11 million, and it came in at 7.39 million for job openings. So you have a lot of job openings, according to the data we got this week. But what we don't have right now are a lot of employers actually filling those roles. So there seems to be a bit of a discrepancy there where there's a lot of job openings, but we're not getting the hirings. So that was the non-farm employment change that we got today. Again, focusing on the private sector, right? Now, something to keep in mind is as we look at, the rest of the week and what we got coming out, Thursday, we get initial jobless claims coming out at 8:30. That's going to be important to pay attention to. Basically, the previous was 240,000. We got a forecast of 236,000. So if we see jobless claims tick up, that's not going to be good for the market. I would expect a negative reaction from the market at large. And when you combine that with the fact that, the payroll numbers are kind of weakening, at least in the private sector, that's a bad combination there. Taking a look at Friday, we get average hourly earnings coming out at 8:30. You got non-farm payrolls again coming out at 8:30. Now, the difference between the one we got on Wednesday and the one we're going to get on Friday, basically the one on Friday is going to be a bit more of a broad stroke. It's not just going to be the private sector is going to include everything, right? So that'll be really important to pay attention to, and that could really, really move the futures markets early Friday morning. That comes out at 8:30 a.m. The previous was 177,000 for non-farm payrolls, and the forecast is 130,000. So I would anticipate that if we saw a weak number in the private sector, we're probably going to see a weak number on Friday, but we'll see what happens. Employment rate is coming in as well at 8:30 a.m. So we got a lot of hard data coming out on Friday. Definitely want to be paying attention to that to see how it's going to affect the market. If you're a day trader heading into Friday, you got to be very careful because you're probably going to get some sporadic moves in the market depending upon what those numbers look like. If you're swinging calls or puts or anything like that, just be mindful of that as we head into Thursday. Because again, heading into Friday, you're going to get all this data coming out, and you don't want to be caught on the wrong end of that. So that's what we got for the midweek check-in. I will be back this weekend for part 2 of our new mini-series on trading psychology. We're covering The Disciplined Trader, written by Mark Douglas. So I will be breaking down part 2 of that this weekend. So make sure to pay attention for that. And then as always, on Sunday night, we will be dropping our market preview for the week ahead. We'll see what we get the remainder of this week, if we can hold strong, or if we're going to dip based off of some of these weak payroll numbers that we're getting. Leave a comment. Let me know what you think. Where do you think the market's heading? Do you think the soft data coming in is going to impact us or not? Or are the bulls going to continue to ride high? Let me know what you think about the Trump-Elon drama. Is it going to go anywhere? How's it going to affect either party, right? Thanks as always for paying attention and leaving a comment. Make sure to like, subscribe, follow wherever you listen to podcasts. And folks, remember, as always, plan the trade and trade the plan. Have a good one.